Low housing inventory continues to drive the Toronto and GTA markets up. Let's take a look at what happened in October. Sales in Toronto have been slowing since the beginning of the year. October had about 9,800 sales, which was 8% higher than September, but actually 7% lower from October of last year. Sales remain well above the long-term average of 8,000 units a month and will continue to run at higher than normal levels. Looking forward from here, there are 4 key factors that are going to influence sales and prices in 2022. Number 1 is interest rates. Everyone's talking about it right now. The Bank of Canada is looking to raise interest rates, and higher interest rates will have a negative effect on prices in the housing market, except that buyers are already having to qualify at the higher stress test levels. This means they're qualifying a few percentage points than are currently available in the marketplace, which gives a lot of room to be able to absorb any of those increases. And what's really going to affect it is a lack of product for sale. This is going to balance out the higher interest rates. Sales are going to slow down a bit, but prices are not coming down. And number 2 is inflation. Inflation does lead to higher prices, and this is mainly related to the replacement costs of building new housing. During COVID, we saw pre-construction costs spike around 30%. This is because there were supply chain issues related to COVID. There's labor shortages due to COVID, social distancing requirements, delays to building. Just about every building in Canada, new construction was delayed because of COVID. Inflation is just going to make all of this worse. You can't buy yesterday's prices. This is the new normal, and you're going to continue to see pre-construction prices creep up because of the replacement factor of building those new homes. Number 3 is resale availability. Essentially, this is new listings coming to the market. And new listings in October were down 34% from a year ago. Active listings are down 55%. This is less than 1 month's supply of listings on the market. Now, people talk about supply chain shortages for durable goods. This is the exact same for real estate. Real estate is sort of a commodity. You can't just add more supply all of a sudden. It needs to come naturally from the market or by building more. And there's no catalyst for new supply to come onto that market. We're going to continue to see a very tight market in 2022. And number 4 is immigration. More people equals a greater demand for housing. If you have the same supply but greater demand, this is going to lead to higher prices. Canada just welcomed 45,000 new immigrants in September, and they're actually on track to achieving our target of 401,000 new immigrants in Canada in this year, 2021. Immigration is going to continue to drive prices up across all major cities in Canada. The biggest ones that are going to be impacted, Toronto and the GTA, and believe it or not, Calgary. They're going to see a stunning number of immigrants coming to that city. And even over the next 25 years, they're looking to increase their population 1.9 million people. That's about a 50% increase in 25 years. Now, taking a look at the condo market. Condo market actually lagged the low-rise market in 2020 and in the first half of 2021. But now it has started to outperform the overall market. And this is related to the growing price gap between these two property types. I always talk about this. We've seen low-rise housing, detached semis, townhomes jump considerably in pricing. But condos, they actually went down during COVID. We've seen them completely recover, but now there's still this huge gap in between the two different property types. This gap always has to narrow. Historically, we've seen it, and it will happen again. That means if low-rise housing is not coming down, it's staying the same, condo prices need to come up. So within the condo market, I want to talk about one type of condo, and that's the studio condo. The first condo that I bought in Toronto, it was a 1-bedroom. It was 585 square feet. When I told my family about it, they're like, "Oh my God, Kyle, I can't believe you live in such a small shoebox." Well, by today's standards, that's an absolutely massive 1-bedroom. I've seen 2 bedrooms that are even smaller than that. So why are so many of these smaller units being built and now appearing? The explanation is simple. The smaller the unit, the cheaper the price. For many people, this is simply all that they can afford or all that they want to spend. Most developments now are even integrating communal spaces that extend your living space into the common areas of the building. You're also no longer seeing big kitchens. You don't even have full-size appliances in a lot of units because people are Uber eating, 4 or 5 nights a week or going out to restaurants again. You don't need an office because the building has co-working spaces. Your unit essentially just becomes a place to sleep. And this is where the pied-à-terre or the studio units really enter. And you're going to see the popularity of them really start to appeal to a lot of people. And this is going to be especially prevalent around business professionals. People that moved out of the city during the pandemic. And now that they're finding that they're being called back to the office, might only be 3-4 days a week, but trying to drive anywhere in Toronto again, my God, we're above the pre-pandemic levels. It's a nightmare trying to get anywhere, especially downtown. I'm already seeing people, looking to buy these small studios, these micro units for their weekday stays. And the market is going to continue to grow. The rental market overall continues to be very strong. Tenants who stayed in the city during the pandemic, they're the real winners. Studios are almost $200 a month higher today than they were in 2020. Bigger units like 2 bedrooms, they're now on average $3,100 a month. They used to be $2,600, $2,800. 3 bedrooms are now over $4,100 a month, and we continue to see huge demand for those larger units. Vacancies are back down in Toronto at around 1.7%, versus 1% in the 905, which is incredibly low. In October, we saw the real estate market continue to strengthen in the GTA and in Toronto. The complete lack of listings is going to continue to drive prices higher, not only in the resale market, but in the rental market as well, which is exactly what we're seeing. If you're an investor and want to get into the GTA, you have to do it now before prices continue to go up and get completely out of range. If prices are already out of your range, then Calgary is an amazing opportunity. I have units in the mid 200,000s, including parking and a locker. Get in touch today and I can find the best opportunity for you.